The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and happy Monday. This is Tony Butler with Insurance Agency Marketing. I'm the Life Sales Director here, and I want to thank you for joining us. Today's webinar, we have Dana Brown from Protective that's going to be talking about some sales ideas here with Protective. So I think you'll find this information definitely usable and selling life insurance. So before we get started, a couple of housekeeping items. First and foremost, we want to let you know that you as an agent, we appreciate you in the business that you submit. We also know that with life insurance agents, referrals is a big part of your business, and we like to think referrals is a big part of our business as well. So if you refer any agent to Insurance Agency Marketing Services and they get contracted with us, we will provide you with a $50 referral bonus for each agent that you do refer that gets appointed with any of the carriers that we do work with. Any business that they write with those carriers, you can get 20 basis points on that business that they submit. So if you have any questions on that, please feel free to give me a call. We also have a new producer builders bonus program where we have 3 different levels. First 180 days that you are appointed. If you submit business, whether it's $100,000 of level premium, $300,000 level premium, or $500,000, there's different packages that we do offer. If you think that you can achieve the $100,000, you can get $750 cash bonus. You can choose a 2-year producer website or an iPad. If you want to bypass that $100,000 and you think you can achieve the $300,000 level, what's available to you is a Social Security program, 3,000 piece mailing, or you can get $2,000 in marketing reimbursement dollars, or you can get a $1,500 gift card. If you want to go for the gusto and submit $500,000 worth of business within that time, you have a choice of either a 5,000 piece mailing and seminar coaching with Matt Gill, he's one of our top producers, or you can go for the 4,000 piece mailing and seminar coaching with Dave Pepper, he's another one of our top producers, or you can choose the Ritz-Carlton travel package. So if you have any questions on that, again, feel free to give me a call. Now here at IAMS, we do offer you back office support to help save you time. So we like to help you work smarter, not harder. So we do have business building tools and resources. We help you with case design. We do have excellent sales coaching for you. Paperless contracting is also offered. If you've been in the business for some time, you know getting appointed with a carrier is kind of painstaking work as far as filling out contracting paperwork. We do give you the ability to do paperless contracting. So once you are appointed with the carrier, any additional carriers that you want to get appointed with, we can assist with that process to eliminate all that paperwork for you. Now we also have a creative marketing solutions department. Jacob Tedlock and his team do an outstanding job of helping you market and grow your business, whether it's in the digital arena or you need brochures or logo designs or redesigning a logo. Give Jacob and his team a call. They would be more than happy to discuss some options that are available to you. Now, we, as a lot of IMOs, have a website. I think everybody nowadays have websites, but would like to point out that our website is 24/7. There's excellent sales tools that are available for you. For you life agents, you do have the ability to run term and universal life quotes. You can access forms online. For you agents that are writing annuities, there's an annuity grid letting you know the what's offered out there in the annuity field as far as the carriers that we work with and what are the percentages on those annuities. We also offer long-term care product grid. So if you have any questions regarding our website, please feel free to give me a call. I can actually walk you through it, let you know how to access certain things on the website. We provide a retirement analyzer as well here at IAMS, and Marcus Solar, who is one of our annuity sales directors, is a subject matter expert in our retirement analyzer. What that retirement analyzer does is it helps you answer questions for your clients, such as, can I continue my present standard of living into my retirement years? How would it affect my family if I were to die prematurely? Um, what are the possible solutions if my situation changes? We do offer this free to contracted agents for the first 180 days. You can continue to get this for free if you are producing either $250,000 in premium on annuities or single premium life. So if you have any additional questions, please reach out to Marcus. He'd be more than happy to answer those questions for you. We also have IAMS Wealth Management team. Charles Hiring Jr. Heads up that team. That team can work with you to help increase your revenues, improve client retention, and strengthen client relationships. So if you have any questions, give Charles Jr. a call. Our Life and Annuity Academy, that is an all expense paid trip by IAMS. We pay for your travel, your lodging, your meals. What the Life and Annuity Academy is, it's a 2-day training which includes sales and strategies from top producers. We talk about business insurance concepts, wealth transfer tools. We've got one coming up here in September. It's the 18th through the 20th. It's going to be co-hosted with Athene. So if you are appointed with Athene and you're submitting business, you'd be an excellent candidate to attend this webinar, or excuse me, not webinars, the Academy. I've got a polling question out here. So for those of you that are interested in getting more information in regards to the Life and Annuity Academy, go ahead and answer this polling question. I'll leave this up here for a few moments. And I don't know if I mentioned this. I know I said that it's September 18th through the 20th. It will be in Des Moines, Iowa. So again, if you're interested in attending the Academy or want additional information in regards to future academies, please go ahead and answer the polling question and make sure to get information out to you. Okay, go ahead and close that down. Let me go back. Oops, sorry. There was one more slide, but they took that out. That was in regards to our summit that we have this year. For those of you that are aware of our IAMS Marketing Summit, this year's Marketing Summit is August 25th through the 29th. It's in Naples, Florida. The qualification period actually ended on the 30th of June. I wasn't sure if they were going to take this slide out. They did, so great. If you have any questions regarding if you qualified or think that you qualified, please give us a call. We'll be able to provide you with information on that. And with that, I'm going to turn this over to Dana. Dana, you there?
I am.
Okay. Let me go ahead and change the presenter to you.
Okay, awesome.
There you go. You see it?
All right, awesome.
Okay.
Can you see my screen?
Yep.
All right, and you're seeing the presentation view, correct?
Yes, correct.
Okay, awesome. All right, well, thank you everyone for your time today. My name is Dana Brown, and I'm the Senior Internal Wholesaler for the Great Plains Territory. Kurt Nolde, who is your Regional Vice President, supports Insurance Agency Marketing Group. and marketing services rather. And we have been working in the territory together for about 10 years. And what I'd like to go over today is some planning solutions for different stages in life. And these are actually live cases. These are two that we did back last year. You're going to see one from a bigger scale sales idea, and then you'll see a smaller one using the same concept. So let me jump into it real quick here. Just a couple of things talking about how Protective designs their products real quick. Just touch on it briefly for a minute. So when we design products, we really want to create these with the idea that they're going to last through a client experience. We want them to stand the test of time, basically. So we've been in the business for over 100 years. I think we're at like 119 years in the business. One thing that we do really well, if you've ever worked with Protective at any length of time, is we do acquisitions pretty well. So we have acquired many blocks of businesses. I think we're up to 51 blocks of business groups that we have acquired over the years. And so we balance that with our product portfolio. So when we make decisions, we really look at the long-term goal of supporting clients to the length that they need, their products, so that they are protected, which is our number one goal. We want to make sure that they get what's expected. So while we might not have the newest, latest, greatest tricks and things out there for people to have, Protective, when a product comes out, we have put a lot of thought into it when we're developing these products. All right, so we're going to talk about the non-traditional family planning opportunity today. We're going to talk about blended family case studies, and then an organic growth sales opportunity. Get in here. All right, so let me kind of set up the sale for you a little bit. So we have a unique rider. There's actually, over the years, we've had this rider, since 2009, but we've, over the years, put it on more and more products. But it's called the income provider option. So this can actually go on any of our term products, our short duration UL, our index choice product, and our advantage choice. So what this gets you is you can actually take this rider and you can stretch out the death benefit and customize it, basically like a poor man's trust if you want. So you pay out in installments. You can do 1 to 30 years. You can do lump sum in installments. You can customize it however you want for the clients. One thing, we treat it as a paycheck or a single premium immediate annuity, these installments. So just know that there's a small exclusion ratio that's on every illustration that's ran for this income provider option rider. But in our sales idea today, you're going to see where this income provider option will work for you. So benefit payments can be made monthly, annually, on a specific date each year. You can do multiple beneficiaries if you want. Benefit payments stretch from 1 to 30 years. And then, of course, we can customize lump sum and, for immediate expenses at death, and then do installments. Now, a couple of things that's a little unique for Protective. There's another carrier that does a rider very similar to this. I'd have to say what sets us apart is the fact that by paying the distribution of the death benefit over installments, it actually gives them a reduction in premium by doing that. So sometimes we do it that way, where we're trying to look for a reduction in premium. Other ways we look at of trying to increase the amount of death benefit available to the beneficiary. So we kind of look at it in two different ways with this rider. So talking about the non-traditional family planning opportunity, this is what we know. 90% of people will marry by the age of 50. The big thing looking at this slide that I want to point out is that 48% of marriages dissolve within 20 years. And what we found, and I'm sure you all can attest to this, is you get a lot of blended families and children. With that, a lot of unique situations that come up, emotional issues that can result in these divorces. but also some great sales ideas. And that's along estate planning challenges that come up. And we're going to talk about two today with that. Before we get into it, though, we're going to talk about demographic twins. Now, to the naked eye, they all look exactly the same. But we know, just looking on paper, that they actually can be some completely different people and have completely different needs. So here we've got a person or two people, both male, age 70, British nationals, been divorced once. I hate the way they write this slide, but that's what marketing gets you. And they're affluent clients. So flashing forward, you can see from the standpoint, they're totally different people. We've got the Prince of Wales and, of course, Ozzy Osbourne. And they, of course, have different things. So just kind of a fun thing to kind of set up the sale. So talking about the case study number one. Now, this is one that actually happened in our territory back last year. And what we notice about blended families is that a lot of times, and it's not every time, but a lot of times we'll find that the spouse, the husband is typically older and the wife is younger. That often happens. It can be different, but a lot of times when you come into these planning opportunities with high net worth clients, there is that much of an age disparity. This situation was the wife had been married actually a couple times before. She's married like 3 times before, so she had a long run of multiple marriages. He was only married 1 time before. He had 3 kids that were in the business. It's a construction business. The kids, the way the succession plan was working was the kids were involved in the business, and the succession plan was that the kids would have the business. So they were already integrated into the business for several years by now. That second wife, I'll just kind of give you some heads up of kind of how it worked. That second wife was not well loved by the children. She, unfortunately, they almost had to arrange times when the dad would see his kids because they didn't want anything to do with that second spouse, to the point of like the grandkids' soccer games. They had to go and basically arrange time when they could be there and the second wife wasn't there. Really wasn't a great setup. And that's when I was talking about earlier about those emotional issues that can be involved. That in this situation, that is what happened. They couldn't even stand each other. The kids wanted her completely out of the business. They didn't want her to touch it. Suddenly, and I will tell you, this is something that not always comes up, but she, from previous marriages, the rest of her other spouses were not wealthy. This particular gentleman was wealthy. So suddenly her need and lifestyle of living did change. So there was a need for her to get income as well as take care of the 3 homes that they earned, or vacation homes that they now had for each other. So what this basically gave us is the income provider option allowed us. We did an installment of $400,000. So we wrote it on her husband. We actually did some planning around her, and I'll get to that in a minute. Just some of the uniqueness that can happen when you're dealing with these clients, high net worth clients too, is that $400,000 for 30 years is what she felt she needed. The total benefit payment was $12 million all in. That gave us an annual premium of $273,000. So what that gave us with the flexibility that we were looking for, taking care of her income needs and the homes. The kids were going to inherit the business and the assets from the business, and then the spouse was going to get the $400,000 for 30 years. So a couple of things with that. If they had done a payout, a total death benefit payout of $12 million, the premium was about 67% higher than this 273. I'm trying to get the number for you so you guys can see it real quick. Hold on 1 second. Right here. It was about, I think I want to say it was about $9 million in premium all in if they didn't do the payout. But anyway, all in about 67,000 or 67% in premium savings by doing the income provider option. So just something to think about with that. Oh, let me tell you before we go on to the blended family, the second story, which is a little bit more of a smaller case, which we see more often. One of the pitfalls that we didn't expect, we expected, you know, anytime you've got a high net worth client, they like to do fun activities, you know, fly their own plane, do different things, skydiving, who knows, all kinds of weird stuff comes up when you've got high net worth clients. They do a lot of different things, mountain climbing. This guy was actually a textbook. We were a little surprised. His underwriting status ended up being standard, which was good, easy, pretty easy to underwrite him. What we didn't realize, so some pitfalls that can happen is the beneficiaries. So with this particular policy, one of the things that we ran into was with that $400,000 paid to her over 30 years, she wanted her kids to be the beneficiary and he wanted his kids to be the beneficiary. So there is some of those unique challenges we talk about in emotional issues that come up. It came up with the contingent beneficiary. Long story short, to take this just a step further for you to be thinking about this, kind of some fun things that happened on this case. When we were going through this, to get her to commit and be okay with the beneficiaries and all that, they ended up talking about it, and the kids ended up being the beneficiary. Well, anyway, last minute, she was like, no, I want my kids to be the beneficiary. So that's what we ended up with. They ended up changing this several months later, and because he owned the policy, that's the other thing I wanted to say with the income provider option. The owner controls it from the grave. So the owner actually changed it over. She has no idea. He owns the policy, that he moved it to his kids. So just some fun things about that can happen on these types of policies. So talking about the second blended family, this is actually my wholesaler. He got married back last year, and we were working on making sure, like, they both had separate assets. His wife is actually a pharmacist, and so they have about equal as far as income. And so they were trying to figure out, you know, they wanted to keep their assets separate, have them go to their own children. Each of them have kids, their own child. They each have one. And so they were thinking about, okay, we want to take care of the spouse if anything were to happen. So this is a little smaller scale, but a little bit more real. And what this is we did for them $100,000 for 15 years, a $1.5 million payout. He's younger, he's age 50. His premium on a non-tobacco was $8,860, and this was on our Advantage Choice product, I believe. And then on her Select Preferred, she's actually a better health than him. $4,648 was her premium, accomplishing pretty much the same thing in this instance, which is the spouse is going to receive the home and the proceeds of the policy, and the children are going to inherit the separate parents' assets. So a couple of things. This is kind of switching it a little bit for you. This is just talks about kind of the way Protective sets up their product line, where they want to do the right thing for the client, and it just kind of gives you a little something else you can do with our product. So originally this was written with these two on the term, the CCUL product. The premium on the CCUL for Kurt is $8,860. We said, okay, what if we took it and put it in our index product? Our index product is the guaranteed IUL product. What would it get us? Okay, so we know on the CCUL, the Custom Choice UL, it's really designed like a term. So he had originally done a 30-year term. Pricing was $8,860. Target premium, you'll see right there, is $9,177. By just not changing any premium, he took that $8,860, threw it in the index product. This is what it gave him. First of all, at our midpoint in year 15, it gave us cash value. You didn't have it before on the CCUL product. If you looked at the 5.6 interest rate where we're at right now, $67,590 is available for cash. Now for taking this is the one thing. You're taking a little bit hit on the guarantee, but you're getting that cash value liquidity that you need, because later down the road, who knows, if they need to move it to another product, 20 years from now, they have, or 15 years from now, they have the ability to do that. 20-year guarantee, and the target premium, not only that, it doubled for the agent, okay? No extra effort, gave them some more cash and liquidity, with a target premium of $18,750, just doubled, just like that. No extra things that you have to do. Now, a couple things I also want to say to you, you'll notice is that if we looked at the midpoint, the 3.5 interest rate, it lapsed in year 32. At the 5.63, it lapsed in year 34 for the index products. So like I said, nothing extra. I mean, if they wanted to stay in the CCUL product, it's accomplishing the same thing of giving them death benefit protection. But when you look at the index products, you've got that liquidity that's available by having some cash value. We did the same concept for her. The only thing that we did is we actually moved her to standard pricing. The reason being, she was a little more healthy than what we expected. So select preferred not necessarily does this work as great as standard and below. So we need a little more richness in premium to get that same concept to work. So same situation, 1.5 million total death benefit payout. You can see here the target premium doubled for her, $17,644. We had to move her to a standard to get a little more richness. That's a more realistic example too. A lot of your clients are going to be standard. So what does it give them? Again, liquidity, $50,354 at 3.5, which is the midpoint. 5.6, it gave her $56,292. Now hers, because with women they live longer, you can see hers is just a little bit unique. And like I said, you take that hit a little bit. So we know the death benefit guarantee, 30 years, no cash value on the custom choice product, which is a term. The ICUL, by just taking a little bit of a hit, the death benefit guarantee at the floor was 20 years. So if you look at the midpoint, it'll last till 28 years, and at the 5.63, it does go to year 30. So just some things on that. A couple of things around the income provider option too I wanted to say is, I gave you examples today talking about just divorces. We use this for poor man's trust. I use this income provider option in situations where, we have clients that think they're a select preferred and they end up being a standard. By paying the death benefit out in installments, that allows you to get back in the game as far as premium. So some thoughts on that. We've used it for, if you've got a situation of a handicapped child and you need to do some income planning for later down the road if, her parents were to pass away, that's another way. We've done it for second homes, like if you've got a situation where you have a family cottage and you want to go and pay, you have like a mortgage on that home and you want to pay it off and you want to make sure that it stays within the family. This income provider option is an affordable option for that, for mortgage protection. So just kind of some things on that. Then let's talking about the organic growth opportunity though with this particular sale we're talking about. If you took 20 clients on average, the odds are pretty good in your book of business that you're going to have at least 20 clients that have this second marriage that you're dealing with. If you just provided them one family plan and had a $10,000 average premium, look at Kurt's and Christie's, it was pretty middle of the road average for premium. That's $200,000 in new premium growth available for your agency just by looking at those second marriages. So just some thoughts around that. What I found, particularly when we're looking to grow business, this is a large family planning opportunity for blended case studies and the uniqueness of blended family situations. The income provider option is a good option for those blended families. And then, of course, lastly, in saying the organic growth opportunity, it gives you another way to look at uncovering new life insurance sales. So that's all I had today. If anybody, Tony, I don't know if you guys open it up to questions, but we might have a minute to do that if you'd like.
Yeah, I would like to open up for questions. So does anyone have any questions? Looks like we do. Hang on just a second here.
Great. If you can just kind of tell me.
Okay, yep. So first question is, it says, if I understand case number 2, the policy lapses at age 84/85. That's probably less than LE.
Mm-hmm. Yep. Well, yes, it is a little bit past life expectancy. The one thing I want to point out too is flexibility in our products. If they need to put more money in, they can. This was what they decided to do. You could make this a little more rich. The planning opportunity that we were looking at, Kurt, when he designed it on himself, he felt that that's what they needed. I mean, I'll be honest, he's a salesman, and he's in life insurance sales. And if you know the kind of lifestyle they run with, that's probably life expectancy for him. But
Okay.
so it was kind of created on him. But
Okay.
yeah, you have the flexibility to make it more rich and go longer. You could.
Okay. Are there any other questions? You got time for one more question. Okay. Looks like that was it. So with that, I'm going to turn this back over to me.
Sure.
All right. So with that, a couple of things. One is if you would like more information on the topic that we discussed today, I've got a polling question here that I'm sending out to everyone. If you can go ahead and respond to that, we'll make sure to get additional information out to you. Okay, it looks like we got a few people that are wanting more information. Now, will this PowerPoint that you presented, Dana, be available, or would it be?
Yes.
Okay.
I can send it to you, Tony, the one. Yes.
All right.
We can get that right on your site.
All right. Perfect. Okay. I'll close that polling question out. And then lastly, if you're not appointed with Protective and you would like to get appointed with Protective, launching this polling question, if you could just answer that for us, I'll be able to get out more information to you as well. I'll leave this up for just a little longer. Still have people responding. Okay, we'll close that one out. All right. Well, Dana, thank you so much for your time. And for those of you that have joined the webinar, we appreciate taking time out of your Monday morning. I think the information that you provided, well, I know the information that you provided, Dana, is and can be quite useful to agents out there. So again, thanks again. Everybody have a great Monday.
Thank you.
All right, bye.